I would never buy a penny of a crypto token because they're unregistered securities, which means they're being manipulated in an unethical fashion by a central party. Whether or not the central party knows they're manipulating it or they don't understand. Some people generally don't understand the ethics. It doesn't occur to them that if you change the monetary policy of the token, you have manipulated the value of the token, thereby defrauding investors in the token, right? When you turn off, yields to miners in the ETH ecosystem and you shift it to stakers, you have defrauded everyone that bought ETH based on ETH mining, and you have actually robbed the miners of their property, right? You have devalued their property. So normally when you devalue the property of your securities holders, right, there's class action lawsuit, right? They would sue you because you stole from them. Even though I'm only involved in this space since August 10th of 2020, we did have a massive run past 60,000 and a crash when the Chinese, banned Bitcoin mining. And then we had another run back above 60,000, and then we had a crash. And then we had a, kind of a false rally where it was moving up into the 40s toward the 50s, and then we got the crash to here. So I would say, even though I'm a newcomer to the space, I'm starting to get used to the volatility. Into Bitcoin, I knew that Bitcoin is on one hand a really good thing. I mean, Bitcoin represents the extreme in asset responsibility, like the most well-engineered, most ethical, most economically sound asset. So we can think about Bitcoin as, well, if I wanted to invest in something and I didn't trust a company and I don't trust a government and I don't trust nature. It's possible there's a glut of oil or natural gas. It's possible that it's hard to move the natural gas 1,000 miles or the pipeline burst. It's possible that you buy into a company and the company changes its mission, or it dilutes the stock, or the CEO gets fired, or maybe the CEO gets caught in a helicopter skiing accident and dies, and you lose your money. It's possible that some politician changes some rule, and the business that looked really good is not so good anymore. So there's a parade of horribles when you're investing in natural commodities or natural securities. And Bitcoin represents this ideal extreme, right? It's all the benefits of a commodity, but it's immortal, indestructible, and it's a scarcity. So I would rather have it than $1 billion of any kind of commodity. And it also represents the best of a security because there is no CEO, there's no board of directors, there's no product to ship, there's no ability to dilute the shareholders, there's no nexus, there's no headquarters. All the things that cause people to lose money investing in securities, Bitcoin can't take on debt, therefore it cannot be rendered insolvent. So that's Bitcoin. On a barbell, it's like this extreme. And maybe one of the great ironies of life and history is that the exact opposite extreme is crypto. So when you buy Bitcoin, you get the best asset created in the history of the world. But then you had to stomach the very, very worst assets and the worst circumstances, because if I look at crypto, it's much, much worse than any commodity because it takes no energy to create it, right? You can create 20,000 cryptos, right? You can't create 20,000 silver mines in the snap of a finger. You can't even create 20,000 orange groves or bushels of corn or whatever. So it's an infinite supply commodity, but it's also worse than every security because with securities, there are securities laws. Like there's no way that the CEO of a publicly traded company would do to the company what people in the crypto industry routinely do all the time. So crypto is kind of the worst of all worlds. It's an unregistered security and it's an unbounded commodity. And So here we are, we're in this volatile world, and you say, well, so how do I feel about volatility? Well, the source of a lot of the volatility is all of the vice in the crypto world, which is just poorly engineered, unethical, not economically sound assets. And if you want the world's best engineered, most ethical, most economically sound asset, you have to agree to live in a world where it is cross-collateralized with the worst assets, and you have to have a thick enough skin that you're willing to actually wait until the marketplace sorts out the world's best asset from the world's worst assets. And the price you'll pay is going to be that volatility. I think that the regulators have been fairly slow in their enforcement of the regulations on the books everywhere in the world, and regulatory enforcement actions. Both they're very expensive and they take a long time, and they're not as effective as you'd like them to be. The assets themselves are trading on offshore unregulated exchanges, and the exchanges have been cutting corners, right? If we take the FTX example, if you can set up an exchange where you're the market maker, you're the issuer, you're the prime broker, and then you trade against your own customers, what you have is a bunch of crypto casinos where they have a vested interest in creating the assets, promoting the assets, manipulating the price of the assets. And the regulators, for whatever reason, have been very slow to shut them down. Right? Like, why did FTX even exist? Well, the U.S. regulators don't want to shut down, an illegitimate exchange offshore. And then when they see something they do want to shut down, it takes years and years and years to win the case in court. So I think it's been just really slow, expensive, ineffective execution of the existing laws on the books. And, they just don't keep up. So that's why the assets exist. I don't think they will continue to exist forever, just because FTX has made it so obvious in the past few months, right? The danger of allowing these things to continue to exist. That I think that the regulators and regulatory enforcement actions will get amped up by a substantial factor in the coming year. It's been FASB or GAAP accounting. The GAAP accounting, if I made a list, at the top of the list would be indefinite intangible accounting. It's toxic to a public company balance sheet. That's the number one issue. I think the number two issue is the volatility of Bitcoin, which has been driven in large part by the market manipulation of the crypto exchanges, especially the offshore crypto exchanges. I think that's the number two thing. The FTXs of the world trading with 20x or 40x leverage with counterfeit stolen money. I think that's created volatility. I think the third is the reputational toxicity of having the asset class conjoined with the crypto casinos. So if you're a really large, legitimate company, if you bought $1 billion of Bitcoin and doubled your money, you would be showing that you lost $800 million. I mean, it's an obvious strike. And then you'd have to explain to your outside shareholders what Bitcoin was, and then you would also have to deal with all the negative publicity that comes from the blow-ups of a Three Arrows or a Celsius or a BlockFi or a Terra, Luna, or FTX. So if you've got a really, really good business and you've got other things, then this is a distraction. You don't really want to get distracted by it. If you had a business where the majority of your assets were cash, and you saw the cash was generating 0% yield, then it becomes more interesting. You just have to be sort of a private company, or you have to be closely held. So a lot more private companies and family offices and the like have discovered Bitcoin because they don't have that gap overhang issue and they've got a smaller group of decision makers that can more easily get comfortable with Bitcoin. And you have to be committed to hold the Bitcoin until the crypto, excesses go away, right? Until the crypto industry gets adult supervision, and 98% of the bad actors get squeezed out, and the big exchanges all get regulated, and they become transparent. At that point, then this is a much easier decision. But we're kind of in this this transitional period where the industry is transitioning from the first decade, which is entrepreneurial and offshore, and anything goes, kind of Wild West, and then we're, the next generation, maybe we get through that chasm by 2024, and from 2024 to 2034, it's more like institutional mainstream adoption, where you have trustworthy, transparent institutions, publicly traded companies, regulated institutions, big institutional investors, big public corporations, and they're trading far fewer assets. Maybe they're trading Bitcoin. Maybe they're holding a stable coin that's fully backed by treasuries or something that they trust, that publishes its reserves every week, kind of like an ETF or a mutual fund would publish its reserves, with a license, in New York or London or the like. When we get to that point, then I think the industry grows up. It's 10x to 100x bigger. But right now we're kind of crossing this intermediate transition period